Hello, today I'm joined by Greg Smith, Chief Executive Officer of IP Group. IP Group are the UK's most active backer of science-based companies with a focus on cleantech, deeptech and healthcare. Greg, many thanks for coming in again today. Should we start with your results? You recently reported your full year results. Obviously there's a lot going on. Can you just summarise those for us, please?
Yeah, so I'll summarise them in three areas. The first was one around focus, so continued focus of the business onto fewer companies, as evidenced by about 50% of the capital we've invested over the last 2 years has gone into just 8 companies, very geographically focused. 80-90% of the portfolio is in the UK, and actually 80% of the portfolio is in the top 20 companies. So an increasingly focused business with a lot of milestones to come. The second is around financial strength. So we maintained our financial strength. We finished the year with more than 200 million of gross cash, and the portfolio remains comparatively well financed. And then the third is around our continued commitment to shareholder returns, partly as evidenced by the 20 million share buyback that we started in December and that we're continuing to deploy at the moment.
Great. And when you came in last time, we discussed about some of the potential catalysts and how some of the companies are sort of approaching interesting points. Can you discuss your progress on that front?
Definitely. When we met last time, I spoke quite a bit about the different catalysts in the 3 areas in which we invest that you mentioned earlier. So that's life sciences, clean tech and deep tech. I think particularly this year, we are very well set on the life sciences side. So we've got about 13 companies that are in various stages of clinical development who will have milestones reaching the end of clinical trial stages over the course of the next 2 years. They roughly 6 in 2024 and 7 in 2025. And those milestones will be a point where M&A or licensing or a further funding will be the objective if the data are good. So we think the risk reward there is really quite interesting.
And then looking at the funding environment, the VC funding environment, obviously we hear a lot about how difficult that is. What are you seeing, and do you see any particular catalysts that are going to change that?
Yeah, the VC funding environment has been much more difficult for the last 2 years. I think 2021 and the first half of 2022 were particularly strong for VC funding, which meant not only did many companies get financed, also quite a lot of fresh capital was raised. So you'll probably hear reference to there's a lot of dry powder out there. In practice, what we're seeing is that many companies and many funds are focusing on their existing portfolio, which is definitely true for us. But I think there's a lot of capital available for the right companies, and where we've seen successful fundraisers in the portfolio, actually we're seeing them tending to be oversubscribed, which is really interesting phenomenon. In terms of catalyst for what could change that, I mean, clearly there is the interest rate cycle off the back of the inflation cycle and what that does to risk appetite. IP Group has been around for 20 years now, and so we have managed through a number of these cycles, and at some point risk appetite will return, and I'd say probably fair to say there are some green shoots showing in terms of interest. And then the second big macro trend, which I think affects us, is the whole science superpower agenda, and IP Group's place as one of the leading pioneers in the UK around backing, growing and scaling science-based technology companies.
Great. And looking at the portfolio valuation, you've proactively reduced the valuation of your overall portfolio, and you've also recently brought in an independent valuer to look at your portfolio. How are you feeling about the valuation of your portfolio as it stands right now?
So very confident that it's the right number because it's been audited and reviewed, and we have KPMG as our auditor. The approach that we try to take with our portfolio valuations is to, first of all, value the quoted companies. That's relatively easy. But then the next sort of 50% or so of the companies are based either on a very recent financing round or a financing round that happened that has been adjusted, and that can be adjusted down as much as up. As you mentioned, we use a third-party valuation agent for a number of the larger private businesses. And then finally, we have KPMG who review and audit our valuations. Each year, they now have to rate us and in terms of our approach to valuation. And for all the years that they've had to do that, they have rated us as mildly cautious. So we feel confident that the valuations are a fair reflection of the year-end position, and that, you know, if we can achieve some milestones, there is upside opportunity in the value there.
Great. And now turning towards capital allocation, you know, you've got a strong balance sheet. Can you discuss your thoughts in terms of allocation of capital over the next year and beyond?
Yeah, the couple of main factors here. The first is we have a very big operational focus this year on realizations. The last 2 years, both in the venture capital industry and for IP Group, there have been lower levels of realizations, cash exits that we've seen compared to 2020 and 2021. So not only are there sort of green shoots appearing and we're seeing a bit of inbound interest in the portfolio, it is very important from a business model point of view that we deliver on cash exits this year. So they're very clear that's a priority for us. What we then do with that capital, we have this continued commitment to shareholder returns. A proportion of all our cash exits is used to return some level of cash to shareholders, which is what is financing the 20 million buyback, and that is that's a continued commitment for us. Then on the reinvestment side, vast majority of our capital is going into existing portfolio to get those maturer businesses to their critical milestones, which will then hopefully lead to success by way of realization and cash returns. So we're very clear on the priorities for this year, and we're very clear on the capital allocation that supports that.
And we've talked a little bit about the healthcare portfolio. Looking at the technology side, obviously at the moment the tech narrative is being dominated by artificial intelligence, but can you talk through the opportunities and some of the elements in your portfolio that you're looking after in terms of more the technology stack?
Yeah, on the deep tech side, the big pervasive trend, probably one of the most pervasive investment trends for the next 10 years is around this whole digital transformation and the opportunity in AI and machine learning. So obviously the things that people will be very familiar with are the end use cases of AI. Having been a deep tech investor in this space for getting on for 20 years, there's actually innovation required all the way through the compute stack. So that's innovation in the way that we transmit data securely with low loss. So things like making the most of 5G technology. So we've got some interesting things in the portfolio that are doing data transmission. Then there's fundamental need for different types of computing. You'll be well aware that in order to train algorithms and large language models, you need huge amounts of compute power and therefore huge amounts of energy. And so more efficient computing, things like quantum computing, optical computing are really important, as are innovations in memory technology. So we have a number of investments in quantum computing and in novel forms of memory. And then moving a bit further up the compute stack, the interface between you and I and machines, as machine processing becomes more human-like in terms of natural language processing, so too will our engagement and the way that we interact with machines evolve. As an example, we have a company which has the leading hand tracking technology in the world, and when the Apple Vision Pro was launched last summer, they introduced the concept of hand tracking through cameras, which clearly presents an opportunity for our business Ultraleap. And then finally, at the top of the compute stack, there are the application layers, and that's where we have companies like FeatureSpace, which is applying machine learning to huge amounts of payment data to help protect consumers from payment fraud. So there's quite a range of opportunities that you can be exposed to through a holding an IP group in the sort of AI and general digital transformation.
Greg, many thanks for joining us again.
Thank you.